Sing to the mountains, sing to the sea. Raise your voices, lift your hearts. This is the day the Lord has made. Let all the earth rejoice. Happy Easter, everybody, and welcome back to Strongman Personal Finance. My name is Christopher Belly. I'm a certified CPA accountant. I'm a long-term boglehead investor. I'm author of the book Stop Being a Broke Loser. It's on Amazon. You better go buy it so I can make those tendies. And I'm off today, and I decided to do a video looking at Joe Biden Jr., and Jill T. Biden's tax return for 2021. Because the only way I judge a politician is by their tax return, bro. Now, I am a certified CPA accountant, and I've been doing taxes for about 4 months. Now, a lot of you people think, oh, well, you got a CPA license, so you must just be a genius at tax. That's not true. A lot of CPAs don't touch tax. They study it for the exam, and then they basically brain dump it. So, I'm going to do my best to analyze this tax return. I'm pretty confident, I'm definitely getting better at tax. But I'm not going to say, oh, I'm a genius at tax. I've been doing it for 4 months, okay? But this is your standard 1040 form. So, as an individual taxpayer, you're going to get all these freaking forms in the mail. And what you're going to do is you're going to compile it all together or pay somebody to do it. And it all eventually flows into this form, okay? Now, there's a bunch of supplemental forms, all the different schedules, blah, 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 blah. All that stuff feeds into this. This form is the final product for your tax return. But there's so much crap out there, as you'll see in a second. So here we have the 1040. And the basic layout is, you got the name, address, blah, 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 any dependents. Do you want to donate to the presidential election campaign? I don't know who does that, but apparently the Bidens do. I never do that. And there's actually a really important thing I want to highlight here. At any time during 2021, did you receive, sell, exchange, or otherwise dispose of any financial interest in virtual currency? Cryptocurrency is the future. The government will not tax us. Yeah, okay. You basically get taxed just like a stock when you freaking buy cryptocurrency, so. So yeah, you gotta report that, and if you don't, you're a scumbag. Okay, so let's go ahead and start looking through it line by line. So the first line here, we have wages, salaries, and tips. $445,449. Doing pretty good. Now on this line, you're going to report income from your W-2, stuff like that. If you have a business, if you're self-employed, you don't report those earnings here. You actually report those on either your Schedule C, or you can just classify it as other income if you don't have any deductions. But this has nothing to do with any businesses that the Bidens are invested in or, partners in. They have some kind of ownership interest in. So you look here, they made $445,000 in wage income, which is pretty standard. Now, somebody's really freaking rich when they don't have anything on line one, wages, salaries, and tips, but they have a massive number a little bit below the tax return, or a little bit further down on the tax return. Next, we have tax-exempt interest and taxable interest. So taxable interest, and I say this all the time, if you buy things like bonds, your checking account, savings account, it's not very tax efficient. So if you don't have bonds in a tax advantage account, you're going to have to pay taxes on it. It shows up on your tax form. So the Bidens here had $3,228 of interest. That's actually a lot if you think about it, because interest rates are super low. I don't know where that interest is coming from. I guess we'll see. But that's a pretty significant amount. I probably had like $20 in interest income because interest rates are so low. Next, we have this very important line called qualified and ordinary dividends. Now, all you stupid little dividend investors, you always make fun of me when I make fun of dividends. And I say, it's because you get taxed. Now, qualified dividends, you get preferential tax rates. And there's certain things you have to do to have your stock pay qualified dividends. It all depends on when you buy the stock, how long you held the stock, etc., etc. But if you have ordinary dividends, like with real estate investment trusts, stuff like that, they get taxed at your highest marginal tax rate, whatever your tax bracket is. So they basically just get added to your income. So if you're a dividend investor, you're going to have a pretty big number here, and you're going to pay taxes on it. So the Bidens are actually smart that way, and they don't receive any dividend, like literally none. That's actually surprising, but they literally have no dividends. which they probably have it in tax advantage accounts. That's why I say dividends suck, okay? Next we have, let's zoom out a little bit, IRA distributions. So they took out $966. Now I've seen these things where there's like life, long-term care contracts, stuff like that. I don't know if that has something to do with it. We'll see. But I mean, they basically took nothing out of their IRAs, which is fine. Next, they have pensions and annuities. Now on your tax form, you're going to get, if you have a pension, annuity, you're going to be given a 1099-R, which is the form where they report your pensions. Now, sometimes they're fully taxable. Sometimes they're not. It depends on how much you invested in the life insurance contract or yada, yada, yada. Here they have a decent amount of annuity and pension income, $52,599. Now, for my retirement, for Christopher Bell, I'm not going to have any pensions or annuities because I would rather self-direct my own money. As a matter of fact, there won't be a lot of stuff on this form because I'll be withdrawing from a Roth IRA at my own accord using my own, specific requirements, and it won't even show up here, okay? But if you buy a life insurance contract, you're going to be taxed on it, okay, unless it's in a tax advantage account. Next, we have Social Security benefits. So, as you can see here, there's a taxable amount, and then there's, the total benefits, and then there's a taxable amount here. Now, the taxable amount, Social Security is not 100% taxable. There's different tiers. There's like 0%, 50%, and 85%. Now, the way it works is they have this weird formula. It's called your provisional income. And I forget it all the time. But it's like half of your Social Security plus other income plus blah, 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 blah. But they use that formula to determine what percentage of your Social Security benefits are taxable. So if you're very poor in retirement, which, if you listen to people like Jeremy LaFufu, you'll be poor. You might not pay any taxes on Social Security. But here, you can see it's 85%. And I can even verify that right now. That'd be funny if it wasn't 85%. I just look stupid. 46,465 divided by 54,665. 84.999%. See, I'm a moron. Yeah, so at maximum, your Social Security can be taxed at 85%, depending on your income. You could be lower. Yeah, you could be lower than that. But that's basically it. So, obviously, they're maxed out on the scale. They have a pretty significant amount of income. They got a lot of wage income. Yeah, a little bit of interest. Decent amount of pensions and annuities. Now we get to business income, okay? Other income from Schedule 1, Line 10. Like I said, there's a bunch of different forms, supplemental forms, and they all feed into this form. So if you have a business, you're not just going to plop your business income in wages, salaries, and tips. That's not how it freaking works, okay? And we'll see it a little bit. So I think they have like one S-Corp they're a part of, but basically you're going to get what's called a K1. Let's say you own half of an S-Corp. You're going to get a K1, and it's going to show all your portion of your income that flows into this form because it passes through to you. S-Corps are not taxed. The money or the taxes flow through to this form, and you are taxed on this form. That's how it works. So their total income is $610,702. Now, this is before any kind of adjustments, okay? You got the standard deduction, you got any adjustments to income, IRAs, stuff like that. But this is their total gross income before any deductions. Now, there's two types of deductions. Okay, well, there's two broad groups of deductions when you're looking at the 1040. There's above the line deductions and there's below the line deductions. Now, it's really confusing and it took me a while to figure this out. I figured it out 2 days ago. But the above and below the line is this right here. This line 11. This is your AGI. Now, there's some deductions you can take above that line. And the best way to think about it is, it's deductions you can basically always take as long as you qualify for them. And then there's below the line deductions, which you may have heard of it. It's called the standard deduction or the itemized deductions. Now, itemized deductions, you may not necessarily be able to take those because you might not have enough stuff to deduct more than the standard deduction. So just remember that above the line deductions are actually better, in my humble opinion. And below the line deductions are hit or miss. But you can either take the standard or itemized. So if you're totally freaking confused, just keep in mind, they made, if you add up all this money here, their wages, their interest, their money out of their IRAs, which that's a traditional IRA. If you have a Roth IRA, there's nothing there. Nothing there. Pensions, annuities, Social Security. It's the best program ever. See how much money they freaking made, and that's all they get in Social Security. A scam. This is their total income. Now, they actually have no adjustments to income from Schedule 1. So let's go down to Schedule 1 real quick. So here on Schedule 1, it shows, this is where a lot of things flow into, and then they go to the 1040. So it's like a bunch of different forms on the outside. A lot of that stuff goes into this Schedule 1, and then from this Schedule 1, it goes into the 1040. Okay, so it's like it's flowing into the 1040. Now here you can see there's basically two parts to the Schedule 1. It's a supplement. You have additional income, and you can see here you got taxable refunds, alimony received. The alimony can be complex. Business income, Schedule C. If you have a business, this is where it goes to before it goes to the final form, the 1040. Other gains and losses, rental real estate, royalties, partnerships, S corporations, trusts. Now this right here looks like the only thing that they have on Schedule 1. So we'll go down. So yeah, they have some kind of business, which we'll see in a second. And then we have adjustments to income. So here you're going to see stuff like educator expenses. I know teachers complain, but you do get like a little tax deduction. Certain business expenses of reservists. I am actually using that this year. HSAs, moving expenses for the armed forces. Most people don't qualify for that. Deductible part of self-employment tax. That's a whole nother video. Self-employed IRA contributions, stuff like that. So you got deductions, above the line deductions, and then you got basically income from a bunch of different sources. So you can see the 61,995, it flows in to the 1040 right here. See it? You like that? Yeah. So that's their total income. They have no adjustments, so I guess they made too much to like get any deductions for IRAs, stuff like that. But you can see from their AGI, which is the line, below the line, they deducted the itemized deductions. Okay, so they took a total of below the line deduction of $42,290. Now, you can either take the standard deduction or itemized deductions. The standard deduction is just the government saying, we're going to be nice, and even though your taxable income is this, you can subtract that from your taxable income, and then you pay tax on what's left. Itemized deductions are very specific things that you can deduct, and whichever is higher, you add up all your itemized, you add up your standard. We don't have to add up the standard, it's just there. You compare the two, and whichever's higher, you take. And obviously, you want the higher one. So here, I know they took itemized, because the standard deduction for married filing jointly is $25,100, and then they're over, 60-something. So they can take an additional, like $1,650 per person. So they definitely itemized. Now, we can go look at the Schedule A real quick, which is where you calculate your itemized deductions. And I'm going to show you why liberals are annoying. So here's the Schedule A. So this form, this right here, feeds into this line right here, the $42,290. So let's see what's on there. Let's see what they itemized. So what do they itemize? Medical expenses? Nothing. It's actually hard to qualify for medical expenses because there's a floor, but we're not going to go there right now. Taxes you paid. Now, this is what freaking liberals are complaining about. So they all love to pay taxes. They all love taxes, blah, 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 blah. But then they get all butthurt because we have this limitation on the deductibility of state and local taxes that you've paid. It's called the SALT deduction. So if you look here, you can see they paid state and local income taxes of $27,000. They paid real estate taxes of $17,000. And okay, yeah, that's it. So they paid a total of $44,462 of taxes. However, they can only take a $10,000 itemized deduction for it if it's more than the standard. Why? Because the Tax Cuts and Job Act enacted that limitation. So if you're a liberal and you live in like New Jersey or New York and you're paying massive amounts of taxes, before this rule, you could take all of that, I think. I mean, I wasn't doing taxes back then, so I don't know. But you could take way more than $10,000. But now these liberal and amazing people that love taxes so much, they complain because they can't deduct taxes on their federal tax return. So I think it's just a bunch of hypocrisy. So no medical. Okay, we got $10,000 of taxes. That's the maximum. Rich people get mad about that. Interest you paid. So you can deduct mortgage interest. And it looks like they paid $14,896. So yeah, that's the total there. And then they gave to charity. Now, charity's a big one. That's where a lot of rich people, get a lot of deductions. So they made a bunch of different donations to charity. And that was a total of $17,394. So you add them up. 10,000 plus 14,000 plus 17,000 equals 42,000. And then you look at that number and you say, is that number bigger or smaller than the standard deduction? Well, it's bigger. So that's what they took. Okay, now we got that. So you also have QBI here. I'm actually surprised they didn't have any QBI, whatever. But that's an additional deduction if you're a business. So like when I do YouTube and I report my taxes and I do tutoring, I actually get like an additional 20% deduction there, which is pretty freaking nice. Okay. And boom. Now you have your taxable income. Okay. This is what you use to calculate your tax from. Everything else is getting to this number, and then this is where you derive your tax from, line 15. So the standard deduction, it's before, it really used to confuse the crap out of me, but taxable income is where you compute your taxes, okay? So you go down, and you can see the next line, tax. So they take whatever, all the tax brackets. The tax they paid on this was, they earned their income, their taxable income was $568, and the tax they paid was $148,000. Oh yeah, so liberal, amazing. Oh my god. So you go down the form, and there's more and more stuff. But basically, you get into additional taxes, and taxes you've paid have flowed in, federal taxes. So this is their tax liability before any adjustments. And then they have stuff that flows in, like other taxes, including self-employment tax. If you run a business, you pay self-employment tax, which is Social Security and Medicare, times 2. It's a freaking pain. It's stupid, but liberal programs, I'm a good person. Oh my god. So they take their $148,000, which was taxed on this, derived from that, and then they add the $2,400. Next, they're going to take this total tax that they owe, and they're going to subtract taxes that they've paid. So they have some taxes coming from their W-2s. That's their wages and income. They paid $58,000 or $85,000. Forms 1099. I guess that's like their pensions and annuities. Other forms, whatever that is. And boom, then you subtract the 2. And okay, they also made, looks like they made estimated taxes. Yeah, they made $49,000 of estimated taxes. So after all that, this is their total payments. So they owe $150. They paid $148 through various means. So at the end of their tax return, they owed $1,752. Mr. Biden, you need to work on calculating your tax liability a little bit better, okay? No, that's actually not bad, especially for a rich person. Well-off person. I wouldn't say he's rich. And here we have the CPA, Walter Deal. That's some great advertising, man. Man, I'm jealous. So that's basically it. This is the Form 1040, and you have all these supplemental forms. So let's see what their business is. Additional taxes. What do we have here? Household employment taxes. Additional Medicare tax. Yeah, if you make a lot of money, you get just extra taxes because, liberals. Itemized deductions. We already did that. Interest and ordinary dividends. See Statement 6. Okay, well, before we do that, here's where their businesses are. So you can see they have S corporations, which we're not going to get into that now. They receive income from 2 different S corporations, Giacopa Corp and Celticapari Corp. And that's okay. That's where they made their money from. So a lot of this, I don't know if they participate or what, but this is where they make a lot of their money from for their businesses. Let's see. Household employment taxes. Total okay, so I guess they paid a servant $2,800. Interesting. Let's see. Additional Medicare tax. Yep, if you make over a certain amount, they come get your money. They want additional money. Net investment income tax. Oh, this is another thing that me, Kevin, and all these other clowns pay when they sell their stocks. S corporation stock and debt basis limitations. So you gotta track your basis. This is freaking pain. Let's see. What else is interesting on here? S corporation. All right, so here's a little bit more detail about where they got their wages from. So the spouse, Jill, made $67,000 from Northern Virginia Community College. Okay. And Joe Biden got $378,000 for being the president of the United States. Okay. IRA distributions, they took $966 out of their Wells Fargo IRA. Okay. Maybe that was an RMD. Maybe. Let's see. Office of Pensions. So here's their pensions and annuities. So they have the Office of Pensions, Office OPM, TIIA. Well, that must be like a, just like a random, non-taxable. Okay. So basically, this isn't a really complex tax return. Okay, here's another interesting thing. Here's what he donated his cash to. And all you freaking politician clowns. Oh my God, what did he give his money to? Well, he gave his money to Nova, the Beau Biden Foundation, Cranston Heights Fire Company, Ministry of Caring, St. Joseph of the Brandywine. Sounds like Lord of the Rings. So yeah, I mean, there's really nothing special about this tax. I've seen like way more complicated tax returns than this. But yeah. Oh yeah, where'd their interest income come from? WSFS Bank. Where do they have all this money in? Oh boy. Let's see. Trade or business income. State tax payments. Yeah, I mean, it's pretty standard tax form. I mean, you get like all sorts of crazy crap in other people's tax. They got like trust and this and that. And they got businesses and this really isn't that bad. It's just 2 S corps. They each have a job, president and teacher, and they have some standard pensions and social security benefits. I mean, nothing really unique about it. So that's it. Hope you learned something, and have a wonderful day. Choo!